we've got Mr. Krishna Kumar, who's Managing Director at State Bank of India, joining us on the show. Mr. Krishna Kumar, let's start with an issue that's grabbed headlines over the past few days. Asset quality has come to the fore again, with even the finance minister having raised an alarm on rising non-performing assets. SBI did see an improvement in its asset quality in the last quarter, but do you believe there's more pain to come?
I believe that in SBI we have, as you said, in Q4 shown an improvement over Q3 of last year. But then the point is, between March 11 and March 12, there has been an increase in the non-performing assets. But we are confident that the performance we showed in Q4 of FY12 will continue in the current quarter and the successive quarters of this year as well, because we have now put in place various systems for monitoring and follow-up of the loan accounts. So I think, and I do believe, that the current quarter will show a continuation of the good performance in NPA management as we saw in Q4.
But also, Mr. Krishna Kumar, there's been a significant concentration as far as restructuring cases are concerned, both in terms of value of the restructuring as well as the industry's restructuring that restructuring has actually been carried out in. Do you view this as a matter of concern?
Well, you see, it's like this: restructuring takes place when there is some hope of improving the quality of that particular asset. So my take is that whatever accounts have been restructured should only look good as the months go by. But then our experience has been that roughly about 15 to 20% of restructured assets do slip back into the NPA category. So overall, the restructuring is something essential to maintain the health of the industry. And it's too early in the current year to talk about the trends in the current quarter, because it's just the Q1. But I think overall the position is not as alarming as it might have looked at the end of Q4.
Mr. Krishna Kumar, what's your sense on the banking sector's exposure to the telecom sector? Because there have been reports of late that it is becoming difficult for bankers to extend further funding to the sector. Your comments on the same?
Well, I don't believe we in SBI have had any major issues in the telecom sector. We have not got any sticky advances or loans in that particular sector. The telecom sector, like any other sector, I think would be judged on its merits, and the proposals would be approved or not approved depending on the merits of each individual case. It's very difficult to make a judgment for the sector as a whole.
And you also have SBI, which has already cut the auto loan rates to one of the lowest in the industry. So what's your sense on the home loan rates now going forward?
Well, even today, our home loan rates are quite competitive and comparable to amongst the best in the industry. In fact, in some segments, probably we are the lowest. So there is no intention right now to look at further tweaking the home loan rates of interest. But having said that, if in the next few months there is a definite decline in the overall interest rate scenario, we could be looking at some declines across the board in all segments as well. But to the specific question, no, as of now, we are not thinking of tweaking any of the home loan interest rates.
Now, what kind of offtake are you seeing in terms of both home and auto loans? Also, what's your target for loan growth in these two segments?
Well, always the Q1 of any financial year is a bit slack as compared to the Q4 of the previous financial year. But if you look at it on a Q1 to Q1 basis, that is Q1 FY12 and Q1 FY13, the rates of growth are sustaining, maybe slightly lower than in Q4. For example, the home loan growth between Q1 and Q1 for us has been in the range of about 13.5–14% so far as of now, as at the end of April. And similarly, the auto loan rate of growth has also been in excess of about 16–17%. So I think there is the growth in credit overall, but probably it needs to pick up much more as the months go by.
Also, Mr. Krishna Kumar, give us a sense of your margins in the first quarter. What sort of pressures are you experiencing in holding on to your guidance of over 3.5% on the NIM front?
Yes, I think the guidance given is pretty much holding on as of now. I do not see any significant downward pressure in the margins in the next couple of months. We might, the entire question of margins would depend on the interest rate movement, and probably Depends on what happens in the Reserve Bank of India's policy in the next couple of weeks when they release the policy. But I think the margins are holding out, and I do not believe that we have any great stress or any great problem in adhering to the guidance given.
What kind of deposit growth has SBI seen in the first quarter? Are you seeing signs of a pickup in deposits for the banking system as a whole?
Well, deposit growths as compared to Q4 are definitely slack, but there is nevertheless a rise in Q1 as compared to March 2012 in the savings bank accounts and to some extent even in the retail term deposits account. It's probably the current account where we see a lot of fluctuations.
Sure, and if we focus on the macroeconomic problems, inflation is on the rise once again while growth concerns continue to persist. What do you believe the options that the RBI has left with now?
Well, it's very difficult to answer the question because it's a question of the policy which the RBI, policy measures which the Reserve Bank of India takes. And I think it's very difficult for me as a practicing commercial banker to have any definite set of views on this. But yes, inflation again seems to be picking up, and at the same time there is an indication that interest rates should slacken. So it's very difficult. I mean, it will be very difficult for me to give any sort of prognosis on this.
And lastly, Mr. Krishna Kumar, your view on the depreciating rupee and which sectors are likely to be affected?
Yes, the fall in the rupee will definitely impact favorably those sectors which are export dominated or export oriented. And textiles is a major export earner for the country, so obviously the textile sector would be benefiting from the fall in the rupee rate. The other major exporting sectors would probably be gems and jewelry, which could see some sort of positive impact of this. And any other sector which is into exports in a big way. On the other hand, the importing sectors, especially those relating to, let's say, oil and petroleum and other such natural resources, would be negatively impacted by this.